Hello, welcome to another update on HBAR. We are looking at the HBAR chart here on the 4-hour time frame right now, and today we have started to see some upside momentum come in. The overall situation remains unchanged. I'm still tracking this as a potential 1-2 setup, which means it is entirely possible that this was a 5-wave move to the upside from the April low, only as a diagonal pattern. So it is not that trustworthy, but it still is a valid and plausible 5-wave move to the upside, which, as expected, did lead to a pullback. In this case, a corrective pullback, a 3-wave move down. Honestly, you can interpret this also as a 5-wave move down if you really want to. I think it still counts best as a 3-wave move down, especially as long as we are holding above Fibonacci support here at 14.2 cents. So from that point of view, the overall scenario that we discussed in previous updates, it remains unchanged. We have a rally and we have a corrective pullback. And we can watch at least for a rally in a 3rd wave. But obviously, I need to see a little bit more upside momentum than just this. You see that this move up that started here on Friday is a little bit small compared to what we've seen before. So, for example, the rally from the 5th of June low was more substantial, but also ended as a 3-wave move up. So this would be one of the last opportunities for the bulls to attempt an upside reversal. Why? Because below the 78.6 retracement, the setup, the so-called 1-2 setup that we see here on the chart, will significantly reduce in likelihood. With a 5-wave move up, we are generally looking for higher prices, or at least we are giving the bulls the chance. It would be nice if this was an impulse to the upside. It's not an impulse. Yes, it is a 5-wave move, but only, as I said, a diagonal structure. These can typically not be trusted, but we can still watch for higher as long as the market holds above critical support. So there are some key risk levels to watch. I can also remove the upper section, trying to keep the chart clean. We don't need that upper section. The 14.2 cent level, as I said, is a 78.6 retracement, normally the ultimate support level for a wave 2. Below that level, we are entering something that I often call no man's land. This is an area in which the bullish scenario is still valid, but it will already reduce in likelihood. It at that point will become more likely that another low is required. And what would happen then? Well, that means we are left with anything immediately bullish. Yes, there is a support area below, but honestly, if the bulls cannot turn around here, they might not do it in this cycle. The support area below was already tested here, and my experience tells me that if a market attempts a reversal and just cannot do it and it breaks down again, it often will fail the second attempt as well. So yeah, there is one more chance then, but we would fall back into the larger pattern. We would fall back into the pattern, into the corrective pattern that started in December, and that would make this entire correction super complex. So we would then basically need another 1-2 setup, new evidence that a low has formed. So pay close attention. We need a 5-wave move up from the low. At the moment, it's only 3. And I want to see a break above the 18.4 cent level as first indication that indeed this wave 2 has bottomed. And we are rallying towards 28 cents plus next. That's the update on HBAR. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.